What's up, YouTube, and welcome back to my channel, Ask Jimmy Smith. In today's video, we're going to dive into the basics of finances for Amazon and e-commerce businesses, and really the importance of not counting your inventory purchases unless they're sold when looking at your profit and loss for the year. I've seen a lot of people get upset over smaller than expected profit numbers, but for many, it can be due to this one mistake. Now, as a disclaimer, I am not an accountant and I am not a bookkeeper, so please talk to your accountant for their advice and ignore mine if it's any different than what I'm about to say. Don't just blindly trust people online without vetting with a licensed professional first if it comes down to something like legal issues or finances. But I wanted to give that disclaimer because this is something that I personally do in my business, and I highly recommend that you would check this out and refer back to your CPA, bookkeeper, whomever helps you with your finances to make sure that it's right for you as well. And it could change in the future also, depending on taxes and how everything is recorded. So keep that in mind. I am recording this in April of 2023. Now, before we get started, I am doing a contest on this video. I've been doing this lately and I plan on doing it more for one lucky winner. So if you want to be entered to win a copy of my Amazon best-selling book, Side Hustle to Full-Time Income, that is right here, plus the free course and audiobook that comes with it, all you've got to do is drop a comment below on today's video. Make sure that you hit the notification bell though, because you want to make sure to tune into the next video to see if you won, since I'll put it into the middle of that video, just like I'm doing in this video. Now, before we jump into the nitty-gritty of finances, it's crucial to understand why keeping an eye on your finances is so essential. Many new e-commerce entrepreneurs might overlook this aspect, but proper financial management can truly be the difference between your success and failure. It helps you do a few things. One, it helps you monitor your profitability. Two, it helps you to make informed decisions on your business. Three, it helps you manage cash flow. Four, it helps you to identify different areas for improvement within your business. And five, it helps you to stay compliant with tax regulations and different issues. So it's very important to stay on top of your finances for your business. And now that we know why understanding finances is important, let's talk about some key financial metrics that you should be tracking for your Amazon or e-commerce business. So the first one is obvious, it's revenue. And your revenue is the total amount of money generated from your sales. Number two is your cost of goods sold, or your COGS, C-O-G-S. You might see it mentioned in different forums and whatnot, which is the cost of producing or acquiring the products you sell. So for instance, if your revenue is $10 on a product and you spent $5 on a product, your cost of goods sold after that item has sold for $10 is $5. That would be your COGS. Now, three is your gross profit, which is just simply your revenue minus your cost of goods sold. Now, again, that is gross profit, not net profit. And so four is where we take into account other things like operating expenses. Number four is operating expenses, which are the costs that are incurred to run your business, such as marketing, rent, prep and ship supplies, virtual assistants, salaries, etc. All those other things that go into your business would be your operating expenses. And then number five would be your net profit. And now your net profit is taking that gross profit number, which was total revenue minus your cost of goods sold. Then you take that number and you subtract out your operating expenses to get your net profit, which is where I see a lot of people start to remove other things from their business, and they think that they're making way less money than they actually are on all the effort that they put into their Amazon and e-commerce businesses. Now, as an Amazon seller, inventory management is critical and definitely critical as an aspect of your finances, and it's essential to understand this one point, which is that you should not count your inventory purchases as expenses for your profit and loss unless they are sold. And I'll give an example in a minute. And the reason for this is because unsold inventory is considered an asset to your business, not an expense. So if you have purchased inventory and you have not sold it yet, it is an asset. It's something that you own that should be selling in the future. And so it's not yet an expense to be taken out of your profit and loss statement. Now, I know this is a lot. This video can be very mathy and numbery and, accounting and bookkeeping, all of that can be a lot to handle, which is why I recommend talking to your CPA, bookkeeper, whomever. But I wanted to give explanations for why this is so key, because I see people all the time think they're making no money or losing money when they're really taking their inventory purchases and adding them as an expense before they've sold, and they should not be doing that. That is not how this works. Now, when the inventory itself is sold, then the cost associated with that inventory is moved from the balance sheet as an asset to the income statement as an expense, which is then the cost of goods sold I talked about earlier, the COGS, C-O-G-S. Now, here's the example. This means if you've sold $10,000 in gross revenue, and I'm making this a very simple example, there's obviously different things that can go into this, especially as an Amazon seller. But if you sold $10,000 in gross revenue and the cost of that inventory was $4,000, then you have $6,000 of gross profit, because we're taking the $10,000 minus the $4,000 of the cost of the goods that sold, and now you have $6,000 of gross profit left over. Now, after that is where you're going to subtract out your other expenses, such as any kind of fees, or you've got your prep and ship, you've got marketing, advertising, virtual assistants, etc. And that is when you're going to be left with your net profit for your business. Now, for example's sake, let's say that you're left over with $2,000 of net profit. Now, the mistake that I see many sellers making, especially newer sellers that haven't, learned about this kind of stuff, is that they will then continue to subtract out other $5,000 of inventory that they've bought. And so they haven't sold this yet. And this can become an issue because that $5,000 of inventory is actually an asset. It's not yet an expense to be removed from your profit and loss statement. So while I can see why they do that, because to me, logically, you'd say, oh, well, I've spent this much in inventory, so I'm just going to subtract it from all the money that I'm receiving back from Amazon. It's technically not accurate. And the reason is because it is inaccurate at that point to say that you've lost $3,000, because let's say you had $2,000 left over, you subtract out the $5,000 of inventory that has yet to sell, and you're saying, okay, well, the 2,000 minus 5 is a $3,000 loss at that point. But that is incorrect, because the expectation is that you're going to sell that $5,000 of inventory in the future, which is why it's an asset, for roughly $12,000 to $15,000, and you're going to make a profit on that inventory down the road. And that's just using generic numbers, right? Typically, if I'm buying something for $5,000, I'm going to sell it for 2.5 to 3 times whatever I bought all that inventory for. So that'd be about 12 to 15 grand. So when we're running your numbers, you need to have an accurate view of what gets taken into account. It can be a major downer if you think that you're losing money when you've actually been making money. So if you've actually made $2,000 and you think you're losing $3,000, then that is a huge difference in the outlook of your business and whether or not you want to continue even doing this and putting effort into it. Now, keep this in mind too. Let's say that even if that $5,000 of inventory that had yet to sell, it's in an asset in your business, it's not an expense yet. Even if that $5,000 were all just bad buys, every single one of them were bad buys, and you lost 10% on every one of those items, that would only be a $500 loss to your business. If you lost 10% on $5,000, you're getting back $4,500 and you lost $500. So if you take the original $2,000 that you made in the beginning of this example, minus your $500 loss because every single other thing that you bought was a dud, you still made $1,500 of profit across the board of your whole entire inventory investment. That is a low amount of profitability and return on investment based off of the entire amount that I've been talking about. But ultimately, it is still a profit. You have not yet lost money in your business from this personal example. Now, the likelihood too of all that $5,000 of inventory purchases being 10% losses is very low if you're buying the right replenishable inventory based on the training that I put in my YouTube channel or in my book or even in my course, which you can check out the links for all those things in the description, by the way. But again, free stuff on the YouTube channel if you'd like to learn how to do that. So this is all key to knowing where you're at in your business, because if you're subtracting out every single dollar that you've put into inventory and that inventory just arrived at the Amazon warehouse and it's going to sell in 2 weeks, well, then you're really making your business look much worse than it actually is. And so I wanted to give you this information as some hope, because I see tons and tons of people just, in the Facebook groups that I'm a part of, being upset about where their business is at. But it's because they're also removing the amount of money they've spent on other inventory that has yet to sell, and they should not do that yet. So hopefully that explanation helps. Please post questions in the comments below, and that'll also enter you into that contest. But also consult with your CPA or bookkeeper. Now, while we're on the topic of inventory, I want to talk about cash flow, since we're talking about bookkeeping and accounting anyway. And cash flow, especially with an Amazon business, an Amazon arbitrage business is more of a cash flow business model. Cash flow is the lifeblood of any business, and specifically with this one, e-commerce is no exception. So when you purchase inventory, you're tying up cash that could be used for other purposes, right? You can put it into anything else. So if your inventory isn't selling quickly enough, it can lead to cash flow issues, and this is where people get concerned. And so I want to give you some tips to manage that cash flow. Let's say you've got that $5,000 of inventory that is just sitting at Amazon. Here's some different tips to help you manage cash flow better so you can make better purchases and know what it is that you should restock. So number one is you want to forecast your cash flow by estimating your future sales, your expenses, and your inventory purchases. You can do this through purchasing products properly. And I know that sounds, pretty obvious. Oh, we'll just purchase better products. But ultimately, if you're trying to forecast how much that you need to buy for new products, you can use a tool like Keepa, which I have tons of videos on this channel for and a whole playlist. You can make sure to test small amounts. You don't want to go out and buy 50 of something that only sells 2 a month. You'd rather test 2 to 4 or 2 to 6 and see how they sell, so that you can spread your money across more products and therefore test more things that will then start selling and will help your cash flow much better. Instead of getting it tied up into one main product, you can tie it up into 50 different products, right? And so that is the inch deep, mile wide approach to sourcing for your Amazon business that I highly recommend, and so many other people recommend also. Now, number 2 for your cash flow is to keep an eye on your inventory turnover ratio to ensure that you're not overstocking. Now, Amazon gives you this information through their IPI score, their Inventory Performance Index score, how often your inventory is turning. But you can also use a software like Replen Dashboard, which you can check out at replendashboard.com to tremendously help you with knowing when you need to restock your inventory, how often, how much. All of these things are easily tracked. And as a new seller, or actually anybody, a new sign up to Replen Dashboard, you get your first 500 orders or sales for free within the program. So if you're selling 50 things a month, it's going to take you 10 months to go through your free trial. So I highly recommend checking that out. Now, full disclosure, I own that company. I'm a part owner, and it's something that I helped build for this particular purpose. Now, to stay on top of your finances, it is essential to have the right tools and systems in place so you can manage that properly. And so here are some popular options for Amazon sellers and e-commerce sellers alike. Number 1 is QuickBooks, and specifically QuickBooks Online. QuickBooks is just a comprehensive accounting software that integrates with many different e-commerce platforms. A lot of people will use a software like A2X, which will pull in all the data from your Amazon seller account and put it into QuickBooks for you. I really like A2X. It is a little bit pricier, so talk with your accountant. Maybe they can get you a discount, or maybe they've got some other way of pulling in that information to QuickBooks. But that is the gold standard as of this point in time, in my opinion, for having accurate bookkeeping. Number 2 is Xero, which is spelled Xero, a little different, but that is a cloud-based accounting software with tons of different features and integrations. I personally like QuickBooks better. I think it's easier. I know a lot of the accountants I've talked to like QuickBooks better, and so that would be my recommendation, but I do know people that use Xero, again, spelled Xero, and so that's one that you can check into. And then number 3 is Inventory Lab, and really this isn't as much of a bookkeeping and accounting tool. In my opinion, it can help. It is a tool that's designed specifically for Amazon sellers that helps with inventory management, profit analysis, accounting, etc. However, they don't take into consideration everything like QuickBooks does. So I personally recommend using both Inventory Lab Lab and QuickBooks. And the reason is that Inventory Lab can give you a quick snapshot of how your business is performing on an overall general level, because it can track all of your sales and your profit and loss and your cost of goods sold, as I mentioned in this video, properly. But QuickBooks is going to be a lot more accurate because it can pull in credit cards and get all your other expenses. And so I like to use both of those. Inventory Lab can also track how much inventory you have at Amazon and give you that number. And so it's a very helpful tool, is what I use, and that is what I recommend. Now, if you're looking for any help with managing your finances, then I recommend a couple things. One, check out my video on the profit first method of bookkeeping for e-commerce sellers. It's on my channel. It breaks down all the different things that you can do to help you manage your cash flow as best as possible. Profit first gives you a really good indication of where the money you're receiving should be allocated for taxes, for expenses, and profit first, as is the namesake of the whole entire method. And so I break that down in a video on my channel. And I actually recommend using a bank that's called Relay Bank. I've done a whole review of them on my channel also, if you decide to do profit first, since they're actually approved by Profit First, and they have automated transfers and all kinds of stuff to help you with that whole system. You can also use them if you just want one bank account. And if you're interested in checking them out, I do have an affiliate link, just full disclosure, where you can get $50 for free after putting $50 into a new account with them. So if you already have an account with them, this doesn't apply. But if you open a new account with Relay, they will give you $50 free after you put $50 into a bank account. You can check that out at my link at bit.ly/Amazon Relay. And you can see the link below and in the description as well. Also, if you need an accountant, bookkeeper, tax specialist, etc., then I recommend checking out eCommerceAccountingLLC.com. This is a specialized team, deals with e-commerce businesses every single day, and that's what they specialize in. And so that's whom I recommend. So there you have it, the basics of finances for Amazon and e-commerce businesses. Remember though, don't count your inventory purchases as expenses until they are sold. By keeping an eye on your finances and implementing sound financial practices, you'll set your businesses up for success and long-term growth. Don't forget that if you want to win a free copy of my book, Side Hustle to Full-Time Income, then drop a comment down below and tune into the next video to see if you are the lucky winner. Let me know your thoughts, questions, experiences in the comments. And if you'd like to join a free community with over 70,000 other e-commerce sellers, then head over to bit.ly/MST group. Again, link in the description. So thank you so much for watching this video. If you found it helpful, please hit that like button and subscribe to the Ask Jimmy Smith channel for more Amazon FBA tips, side hustles, artificial intelligence, and business building strategies. I hope that this video helped you and blessed you, and I hope you have a great rest of your day and a blessed rest of your week.